All right, I'm looking for 29,443 even to be blown out. We're entering like the middle of the macro, 950, 1010. So if I can get underneath there, I'll try to get a long one. The candle before one we're in right now, if it stays as it is here, just a little bit more, just a little bit more. Needs to go down there again. I can't take it with that. Or just a little bit more. Right in the middle of the macro. The candle previous to this one should be coming inversion fair value gap. Come on. There you go. There you go. Right there. Just a little bit more of that. Now, now. I think it's it. I was trying to get down to get to that previous first percent to fair value gap. I can't hold it any longer. I gotta take it there. All right, put the stop underneath the wick. All right, we're gonna reach for the high of the morning. About one tick underneath that. Again, obviously, no market replay here. No volume profile required either. How about that? All right, so I'm looking for the wick, the premium wick that's just above me. I'm watching price action, but I don't want to draw anything yet because we're close to that low still. I don't want to see it rip underneath that low again. That's good. That is good. Now I don't want to see half of this candle to the left hold any kind of interest. So I'm going to copy this down here. I'm showing basically the wick constant encouragement. So if we get a close above that on this candlestick, I'm going to bring the risk to positive now. So I'm going to get something if I'm knocked out. What I'm trading is the day one Jackson Hole Symposium, day one. This is seek and destroy model. So I think they're going to take that buy side that was created at the intraday high. And there's another high, which I'll show you in a couple minutes. I'm just watching to see if we can get this SIBI right here. No volume balance. Let me see. The close versus the open. It's the same price, so there's no volume imbalance there. So we'll drag this over here. So I want to see it now. Stay either in the upper half and ideally just use the high of it for discount sensitivity. In other words, treat it like a trampoline, basically. I kind of want to add here, but I'm going to wait for a little bit more follow through on the upside. I like to have the position have a little bit of I'm watching this individual candlestick. I need it to close outside and above like that. Like just let me get it close above that high of that inversion fair value gap. And that'll there you go. All right. So I'm bring the stop up now just to the low. And right inside that volume imbalance right there. You see that? And I have the low of this inversion fair value gap and the consequent encouragement level, all three levels being like my three PD arrays that supports the trade. All right, there's another SIBI that I want to see behave as a inversion fair value gap. Entering it now. Stay above the Wicks constant encouragement. Close above it. Come on, close above it. These are very tricky types of days seek and destroy. I don't try to make a practice of trading them, but I had a goober tell me I'm hiding from the day. Oh, wait till you see what I'm gonna do. All right, so let me map it out here for you. So I am just a little bit bigger. It's too small. Right. So I'm trading Jackson Hole Symposium. This is day one of that, and I'm aiming for that high. So, and it's a seek and destroy profile. So I'm looking for this. I think that's the blue. Ye- So that's my intraday. That's the intraday high for today, and it's where buy stops are on shorts, and that's my terminus for now. It may evolve into another slightly higher high, but I want to see how it books here. I'm watching that wick's consequent encouragement. Let's see. It's a lot of shared wicks in here, so let me show you the other SIBI that should be an inversion fair value gap here. I got over there and got to consequent encroaching a bit now. We want to say, there you go. I was going to say, we want to see it kind of get to the other side of it. So I can bring my stop up now, just the low of the wick that I measured consequent encroachment on. Because if it goes below consequent encroachment at this point, um, I'm not interested. So I have several wicks and an order block down close candle supporting my trade. So that's my three PD arrays. Don't want to see it mohawk. In other words, make a little movement below the inversion fair value gap we're inside of now. So preferably it stops right here and goes higher. Ultimately, that's what I'm looking for right here. That's exactly what I'm looking for. I don't want to have to sit through any kind of a period of time inside this little SIBI. Otherwise, I'm gonna have to worry about the upper half of the wick. If it trades down there, my stop should be still safe. It would take a real run to get down there. All right, so fancy dance this a little bit higher. Make sure I can get a better fill. I think if it's going to go up here, it's going to take the top of that SIBI. It's highlighted in green. It's shaded green because it's a target. Don't think too much about it. I know I like to keep a color scheme, but I think I'll use a best case scenario, taking that high out, and then I'll use a limit order here. So there you go. I'm I would like to put another long one and build it up a little bit bigger than what we have here. Keep monkeying with this thing. It's going to end up messing up. Every time I try to zoom with it, it's sometimes I lose the price and time axis, and then it's like I'm stuck, and it messes up the recording. I gotta break the recording and go into. Oh, wait a minute now! Don't you get overzealous on the downside here. You have no reason to be doing that here. If we close below that consequent encouragement, I'm gonna have to wait for it to dig into the upper half of that wick. Well, we're gonna see how good my stop loss placement is now, because it looks like, yep, the upper half of that wick needs to really, really come in and shine. Keep the bodies inside the upper half of that wick. Come on. Look at that. You can't get much closer to that stop loss. Come on now. Give it up for ICT. You know. You know it. Stop loss game is best in the business. All right, so I want this high and this high. I think it's going to pull right up into that, right up into that high. Right there's the next one. But right now I'm focusing on, does price want to show me a willingness to get up to that high, and then that one. Right there. Right there. Pull it up. Bring it up. Come on. Sometimes you got to coax it up there, folks. Okay. You just got to drag your mouse. See, sometimes it works. Sometimes it works. You got to show it some love once in a while. High right there and that high. All right. The smiley faces, because I'm going to be speeding this video up and putting it on X to prove that it was all done. There's no way I could be doing all these things in the amount of time that someone would say, oh, it was hindsight after the fact. I know some of you are still going to call it hindsight because you couldn't copy me, but that's okay. That's never going to happen. So I can live with that. Wait a minute now. Listen, listen here, Jack. You better stay up there. You better stay up there. Stay in the upper half. Keep those bodies in the upper half. Come on. Keep it up there. Stay in the upper half right there. Let me draw it out for you. So this is the discount array I'm looking at here. It's the upper half of the wick. You don't see that mic off, by the way, do you? Ask Chris Laurie if he ever taught that. So look at this section here, and the bodies, if they stay up in there and fail to go below on a closing basis, I should be good. I don't want to see any lower wicks, so I'll add here. So it's either going to start running for me here, or it's going to take my stop. And either way, I'm okay with it. I can't leave. I can't lose on it. So this is the only attempt I can have now to pyramid. So I'm looking at that high right there. I want to see it pull right up into that. Come on. This is the dead pull technique, where I pull price up with my mouse. You got to have exclusive membership rights on platforms to get that. You know, it's not free. Come on, get up there. And come on. And this one should be a large range candle digging up into it. So I'm going to put a limit order in there for 4 contracts. So if it takes out this one, it's definitely going to take out that one. And I'm already smiling because I already know it's coming. Like, I already know it's there. I just need this candle to be a large range up close candle. If I get that, then it's all but guaranteed then. I know it's probably taught in Wyckoff and supply and demand and Gann, and Larry Williams never talked about that either. No disrespect for the OG. I gotta keep these people honest. They talk all kinds of craziness. Come on, you're so close. Go ahead and kiss it. Come on. A little bit more. We're so close. It's like my stop loss. It gets real close to it. It says, nah. It's like, all right, Caleb, watch this, brother. Watch. Here it comes. Come on, bro. I just know it's going to be this candle. It looks like it's trying to sell the. There it is. Who's your daddy? Yeah. Bring the stop up again. Now the stop here is below the inversion fair value gap because we've spent a lot of time with the bodies in there, and now we got the whole lay of the land right here. Okay, you can see everything. I gotta be careful spreading this thing out because every time I do it, I'm gonna change this because it's not terminus no more. And so that'll be next partial. I think now we have to just wait and see now. The buy side and balance, sell side efficiency we just created. I want to see that on the support price in the upper half if it trades down there, but I prefer it leave partially unfilled. So if it can go down there and be partly unfilled, that's actually a positive. Perfect if it never goes back down in there. But you always got to give an opportunity for institutional order flow entry drill, which is ideal when it's really, really bullish. You don't get half of the gaps or imbalances filled. You just get a small little poke below it being the high of the measurement for the fair value gap. Come on. And this is the part of the trade that seems like it lasts forever when it's seek and destroy. Because it could, you know, really go down and take the low out of the day too, because that's what the nature of it is. It goes up and down, up and down, up and down, and then it comes real quick for the other side. So I tried to wait for the macro. I waited for the low to be taken out that was formed intraday, and come on, get up there. As soon as we got into the macro, about halfway through it, 950 to 1010 macro. I don't have it highlighted here because I'm. Come on, get up there. Seek and destroy are very, very tension demanding, which is why it's not something I think you should be trying to trade. Watching it certainly, but execute on it. You're gonna have to know some stuff. Otherwise, it's gonna be very frustrating for you. And I hope that the rebranded gang, and you know who they are, the ones that claim I learned this from somebody else. I want to see where I learned all this from everybody's mouth today. Come on now. And let's leave this partly open, unfilled. Right there, that buy side balance. I'm going to see it stay open. We did institutional infantry drill now, and I don't want to see anything lower than what we just dug into. So we'll leave that open as it is. If it does that, it's going to go. So it should rip right from here and bust out the intraday high. Definitely now. I'm not concerned at all about getting stopped out at this moment. Markets don't top like that. Come on, bring it home. Come on, bring it home. Come on, it's stalling here. You dirty dog. I'm gonna change this to 5. So that'll leave me 1. If it gets to my limit order, I'll get out with 5 and have 1 left. The buy side that's noted there. This looks like it's starting to cork. I know you probably heard about that in Wyckoff too, right? When the market's ready to pop a top, okay, in other words, the high I have noted here, generally what will happen is it'll make this weird little block of price action. And it's not a bull flag. It's just like a weird little block. Like it looks odd. And it becomes very, very difficult. When I was seeing it a lot in the commodity days I was trading in 1990. Raise the stop up here. There you go. Right underneath that consequent encouragement. Yeah, the buy side balance, sell side efficiency. Um, when I was seeing it form, it would scare me out of trades. I was afraid it would be like a kind of like a harbinger of doom. It was going to reverse on me. So what's happening in here is the market is finding a period of time where it just wants to wait a little bit. Now, ideally, I'd like to see it just rush right up here right now. But if it doesn't do it on this candlestick, then it's corking. And imagine a bottle of champagne, okay? And it's New Year's Eve. You know it's getting ready to be time to celebrate. Celebration. Everybody takes their champagne bottles out and they pop the cork. Well, price action's creating that little square or thereabouts, and it's going to pop, and it's going to pop and run real quickly up into my target, and hopefully it gets to the buy side liquidity, and then it'll be a happy ending. But either way, if it gets my 5 limit order executed, that's okay because I'll raise the stop up and be content with that. Already, I'm doing the most. Okay, nobody else is going to map out the day like this. I guarantee you that. And you watch and see what everybody else is doing. They're going to have all these other things that they looked at. Maybe they've succeeded in something, but what you're seeing here is the reality, what it really is doing. Why bullish? Because we failed to get down to that August 4th, 2026 NQ buy side and balance, sell side efficiency, the volume of balance high of it. So since it didn't have any willingness to do that, come on, man, run up from here. So this is a little annotation. It's like a cork, okay, where it just simply isn't acting like a classic continuation pattern. Like if you want to go through the school of thought where, bear flags and bull flags, that type of thing, it's not behaving so much like that. It's a sloppy little block of price action. And it's right below a low, I'm sorry, below a high that you're looking for that's simply not willing to move lower. So it's being stubborn. So just like a cork is popped on a bottle of champagne, that's how I envision what price is doing here. Problem is, it could be a slow bleed out, and then the last 3 or 2 candles, it finally delivers it. But it's very, very mm, it's nagging for someone that's brand new, and, like, you just want it to get to your limit order and just be done. Since I've been trading for a bit of time, I'm used to this pattern here, and I know if I just submit to time, it's likely to get up here and at least blow out the high I'm aiming for 5 contracts to be sold at. Whether or not it has enough gusto to get up there and clear the buy side, that obviously remains to be seen. Ideally, I'd like to see it pop through it and just go a little bit further, go up like 640. That'd be great. But just try to at least get me the 5 contracts, and then I'll measure anything else that's there. Look how nice that the upper half of that wick behaved and where the bodies were. You don't see that anywhere else, folks. You just don't see it. As much as they want to say it's rebranded this and rebranded that, None of the stuff I trade with today. These my PDRAs are not based on anything with Larry Williams. They're not based on anything Chris Laurie. They're not based on anything supply and demand. They're not based on anything Elliott Wave. Wyckoff is nothing in there either. No Hearst cycles, no retail, nothing, no volume profile, no footprint. Like none of that stuff is here. None of it. And you'll want to grade the first range of the morning when you're anticipating seek and destroy because it's first day of Jackson Hole Symposium, and they just these people are unelected and they just have a lot of money and they sit around and they plan little things and it's just I never call them elites. Everybody else calls them the elites. They're not elites. They're just globalists, Luciferians. They push things into policy with their money. And throughout the day and session, when members come in and out of it, they'll get stopped and they'll be interviewed. And then those little talking points make their way on the internet in certain places. I don't care to know what they're saying. I don't care. I just know that it's going to be a whole lot of tomfoolery and price action on these given days. And usually, if seeking their story is going to happen, it's going to be on the first day. Not that it can't happen again, but that it's usually on the first day of Jackson Hole. Come on, come on, come on. See how slow and just tedious it's just dragging itself up there very, very slowly. I remember being a younger man and looking at these things, and I needed the trades to pan out. Like I needed them to pan out because I was just a wreck emotionally. Like right now, I would lose my mind. I'd be like, "Man, come on, come on!" And I would either close the trade or take so much off of it. It didn't matter how much it moved up to my target then, because it was usually one contract left, and I would never be satisfied when it hit there. So my experience is telling me, I know what this is. This is a fake high. They toss that little doji in there. And Steve Nielsen's gang, they see that and say, "Oh well, that's bearish because it put a doji there." No, no, it's gonna run right over top of that. I want to see that candle work right there. Be blown out and see me smiling. I know it's there. I know it's going there. Let me put this back where I want it. Come on now, get some bullish candles in here. All these people leaving comments saying I'm arrogant. Your ego's showing. I'm entertaining. I do this to get people all fluffed up. I don't need to say anything. All my videos could be silent and I could just be executing. But I'm having fun. That's essential for me. Otherwise, I don't have any interest in doing this stuff. Gotta have fun doing it. All right, come on, green candles. Let's go. Send it. Send it, send it, send it, send it. It shouldn't go any lower. Come on. Think about this. Say you're in a long yourself right here, and you're wanting that high to be taken out. Look how just slow and like watching paint dry. See what I mean? It just gets up there and then clicks back. That's come on, come on. I remember so many times where I'd be behind drawdown as a 20-year-old, and I'd be in trades like this where I knew once I get this trade to pan out, I'll be back in the plus column and the drawdown would be, erased. And I'm like, come on, come on, come on. And I had the weight of trying to get the drawdown erased and mitigated that it would be so hard to be holding on to this. And it's like, come on. Ah, there it is. Yeah, how about it? Space Mountain, baby. That's right. All right. Come on now. Come on. Follow through a little bit. Come on. Look at that. I'm off by one candle buying the low. Bring a stop up here. I don't want to get I don't want to give anything back now. So if it comes down, stops me out now, I'm okay with that. It's only one contract. It is what it is. So see if we can get lucky here and see it squeeze up there and bump that high. Come on. You're so close. Let me take a screenshot of this. Put it here on X. There you go. This is the part that guys that want to use my videos hate because now they got to edit. They got to chop this piece out of the video. Something don't look right. Something looks fishy here. Right. Come on, let's get it. See how it kept that buy side and balance, sell side efficiency open? It just gave an institutional order flow entry drill and left it partly unfilled there. So that was wonderful. That's always indicative of continuation on the upside. So anyway, I'm admittedly, if I could be honest with you, um, in my mind, the rest of the day, I'm going to be upset that I didn't buy the low candle. I knew I wanted to do it, but I just second guessed it because I have so much emphasis on the fact that I know it's seek and destroy, and I can get it wrong on these days. Like I can get stopped out, or it won't hit my target. So this looks a little toppy in here for me. It could come back down and take out those wicks just underneath my stop loss. So never, never, never want to pull the stop back. I've secured a payday. So I've worked for this position and I don't want to do it on a charity basis. So I got to keep the stop where it's at. Never give up a higher payday. Nobody does that in the working class as a working class hero. You don't give your boss a freebie. You're there for gainful employment. So yeah, I'm a little perturbed with myself that I really like to be in the high and low candles when it forms. It's just a thing that I aim for. I know it's not practical for you to think that that's possible for you right now, but given enough time, I've been doing this for 33 years. I I know what I'm doing a little bit once in a while, right? I get lucky once in a while. Okay, that doesn't look good. That certainly looks like it wants to come back down on my stop. But if I had two on, I would have took one off. Oh yeah, they're going for a stop. Just let it happen. Sit back, relax, let it happen. Here it is. Well, let's take a screenshot of this, go over to X, let the boys know what happened today. What's this, Brian? Oh, you talkers. Go. There it is. So now everybody's going to look at this. And while I'm going to render the video, I'm going to grab something to eat before I post it, though. That's it.